Good morning, everyone, and welcome to another edition of Bleeding Crypto's 10-minute Bitcoin update. Today is Friday, June 21st, 6:56 a.m. local time. This is part number 3 from this new series that I'm trying to do. So please listen to the last 2 just so you can get an idea of how I trade and kind of what my system is about. So I don't have to explain it and you don't feel like you're lost. So there are 10-minute videos. Yesterday went a little bit over, but nonetheless, I think it's a good way for you guys to get accustomed to what I look for. I am a day trader, so I look at low time frames. I look at the higher time frames, which is the daily for me as a day trader. The daily time frame, the 12-hour time frame provide the targets. The smaller time frames provides the setups. Now, I got to give you my disclaimer to cover myself. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all and going broke. Like me, I am completely broke. So I use fantasy trading. So this is for entertainment purposes only. All right, perfect. So let's take a look. So this is where we left off yesterday. Yesterday, we were here. Okay, we were here yesterday and we were waiting to see if we can bounce off this continuation rule. And if this continuation rule was invalidated, we were going to do this. So if it breaks below the 0.50 and it closes below the 0.50, then and only then are we allowed to use our reload zone. Our reload zone was broken as well, closed below it. So I told you guys, if that happens, then the bullish scenario for a continuation to the upside will be confirmed broken when we cross and close below the blue line. That's why I say it's important for you guys to listen to the previous videos so you can see it before it happens and then watch the aftermath, and it helps you understand and see how I view the market and why I view the market and why I say the things that I say. It's a good way to fact check me. All right. So we broke it. And I told you guys that what we don't want to see is we don't want to break below the 100 EMA. If we break below the 100 EMA on the back test of the lower time frames, that's when you open your short position. I told you guys you go to the 5 and 15-minute time frames. I gave you some examples on yesterday's video on what to look for. We look for those market structures. When those break, they come back. When they back test, they put those bearish market structures. On the rejection, on the rejection of that, you open your short. It's exactly what happened. You don't look at it on the higher time frames because the higher time frame looks like this. You're not going to see the back test here. You're going to be too late. So what do? You go to the smaller time frames, which would be in my case as a day trader, the hourly time frame, and look right there. Absolute perfect textbook right here, and then we dump out. Now, if you wonder why people would pay me for being in my Discord, for learning how to trade, learning the different techniques that I use, is also because of this. At 1 o'clock, at 12:55 in the morning, my alerts go off. I'm sleeping. I wake up and I take the time to look. I take the time to inform my members, hey, it's time to start paying attention. We lost on 100. And I give them the play-by-play until the short was open at 252. The short was open, excuse me. I thought I said long for a second there. Short was open, and then there we go. People were able to get in, able to now be in profit and have a buffer between more dumping and if we do come up, what are we looking for? Now, because we lost it and we back tested, we gave the bulls lost control, gave it to the bears. However, if you understand market structure, and this is not something that happens every single time, but more often than not, you know that these falls are controlled. They are controlled because every time we drop, the way the market is controlled through liquidations. When we drop, we have big whales jumping in to short. Those big contracts are represented here 302. Look at this. $302 million. 302 million, 100x leverage. They came out and took it immediately. We have another one here and another one here. So when you look at a chart like this, excuse me. No, right here. When you look at a chart like this and you see these drops, and then you see these moves up, these drops, these moves up, these drops, these moves up, you start to put the pieces of the puzzle together. These drops, which are lower highs and lower lows, constituting a downtrend, that is why I expect a move for a lower high. Now, could we continue to drop down lower? Yes, we can. Absolutely, we can. However, probabilities start to shift. How bad do the market makers want to wipe out what the delta is? And the delta is this, guys, right here, this delta. So this is $10 billion in short liquidations. Now, that may seem like a lot of money, but in the past, we used to see a buildup of 18 to 24 billion before they would drop it. Now, not so much. Look at this. Look at this. This had 1.8 billion. They wiped it out the next day, and they added 1.57 billion of longs, and that same day they wiped it out. They increased it. They increased the short liquidations to 4.7 billion. The next day, they took it out, added 1.3 to their pocketbook, took that out, and now we're at what I say, 10 point something billion, 10.11 billion. So when you understand and you put the different pieces of the puzzle together, you start creating a thesis, a story, a reasoning. These moves start to make sense. So that's what I do. I take all that information and I come up with a probability. And I do it step by step. The way you saw this, continuation rule gets invalidated, then the reload zone. Reload zone gets invalidated. Okay, we take that off our chart. Now we look for a hold of the higher low. If that higher low gets broken, we just broke the upward structure. Yep, that was confirmed. We need to hold on to the 100 EMA. If we lose it, we need to look for a back test before you short. Next target is $60,800, and I'll show you why in a minute. Yep, it happens. Do you see how it's a step-by-step sequence? It's a check mark. You check, if this breaks, check. Go to the next one. If that breaks, check. If that breaks, check. And you keep on doing it. Rather than panicking, you have a plan. And if you have a plan, you're more likely to have profit on your fantasy trading. Of course. Now, what am I looking for now? I'm looking for a target of $60,800. All right. And if you ask me why, I'll show you why. We're going to go here. We're going to go here. And I want you to pay attention to this is the reason why. We have been inside of this channel and we have been playing this channel very, very well. And it's been hitting the top, the medium line, and the bottom of the channel like a Picasso painting. Absolutely just a thing of beauty. These types of channels, these types of indicators, these types of drawings, whatever you want to call them, whatever you want to use, they provide a purpose. Just like my EMAs provide a purpose, just like the diagonals provide a purpose, the horizontal, but these channels provide a purpose, a visual purpose not a visual purpose, a visual of a high probability where something is going to bounce. And if it doesn't bounce, what to do next? So we lost the key area. We're in a short. Our target is here. However, do you think the market's going to make it easy and just go straight down because, we want to help you get paid? No, I understand that. So what do I do? Well, what I do is I go to the lower time frames for that setup. I go to the lower time frames. I see this. Actually, I'm going to go to the 4 hour, just a little bit cleaner, right here. So I go to here and I look. Okay, lower high, lower high, lower high. Okay, we haven't had a lower high yet. All right, we put a lower low. There's a lower low confirmed. So after lower low, what comes next? a lower high. Okay, well, let's see. What would that, I'm going to take off this fair value gap. Okay, guys, it served its purpose. Now I'm going to go snap it from the bottom, bring it back in here. There's a lower high rule. Move this over, extend this out, and there we go. So now I am looking for a touch inside of here before our next rejection. Just the way we did the same exact thing here. Let me push this out. Give me 1 second. There we go. Just like we did here. Same exact thing. We confirmed the lower low. Now, if this is the bottom, that's the one thing you have to understand. That, hold on, let me take this out of here. I don't know if this is the bottom. New York can continue to dump it. But because I have a wick here, I'm going to use it for now. And it's going to be valid until we put another lower low. All right, so just so you guys understand. So if this drops to here, I have to then adjust this and lower that. So if it happens, these videos are going to happen once a day, once every 24 hours, so a lot can happen. But as of right now, I am looking for a move to the upside. Now, can I find confluence? Is there something that would get us to go into this direction, at least start heading into that direction? Well, that's where I use high block. They took out this $302 million of 100x contract, but there's another one right up here. This is a 50x contract. They don't always go after the 50 and the 25, but they do always go after the 100. But there's a good chance. There's a chance, not a good chance. There's a chance. So that's 64,875. Let's see. So 64,875. 64,875. Let me see where that's located. Give me 1 second. 64,875. 64,875. We've got a 302 million liquidation contract, and I like putting yellow. Okay, perfect. So where's that in our? Okay, so that's right here. So that's on the way up. So this can act as a magnet to get us to get up into this here. Can I find something else? Here it is. Here's a double fair value gap in here. So I like this double fair value gap right there. That is you saw how well the fair value gap worked on the last one, right? Well, why would you think any different on this one here? And look, it falls right inside of our reload zone, which would be for a short position, which would be our lower high rule. Lower high rule means we're going to come somewhere inside of here, pivot. But when we have a confluence of something like this, and I know the validity of this particular indicator has a good chance of filling, and that lines up with 706 inside the box. It's a lower. It would be another lower high. We already put a lower low. I'm going to treat this not as a pivot to all-time high, like most people see as soon as they see green, they think all-time high. No, the burden of proof is on the bulls because they've lost complete control. So I'm going to assume in a day trading mentality, in a micro look, not a macro look. In a macro, I'm super bullish, but on a day-to-day trading, on a day trader, I have to look, where's my next setup coming? My next setup is coming here. My short is in break even because I have enough buffer. I waited for my signal. I gave out the signal. We have that buffer. Should I take a paycheck now? Yeah, we could. But I believe that New York has lately been on a rampage to just dump. This was yesterday. Look, as soon as New York opened, they just trashed it. And they've been doing that lately. So for the small gains of here, I'm just going to hold on to it. I'm going to go hold on to it in the event that they continue to drop it, because the next target is not that far down. The bottom of this channel is at $60,800. So it's not that far down. So I'd rather hold it as an insurance, and I'm already at a break even here, so no loss. So I know that if we do come up and break even and we start climbing up, then I have a goal. I have an area of confluence that I want to go ahead and take a short position in. Now, because I'm a day trader and a scalper, there's certain signals. I'm going to give a signal out at a certain point to go long up to here, close or long, go short for that lower low. Now, what would invalidate that? Well, it's really simple. You look at this chart, it's not that difficult. Even for the most novice, you should be able to understand what that invalidation is going to be. Invalidation is, look, we have all these lower high peaks. Once you start breaking above the nearest lower high, which is here, then you can start saying, hey, I need to pay attention because it looks like the bulls are trying to take control. A break of 1 doesn't constitute a pivot or a new all-time high. It starts to show the strength that the bulls have. I'm already 15 minutes in, guys, so I'm gonna have to cut this. I'm trying to keep these things at 10 minutes. But a break of here and a break of here, for me, would constitute a pivot and an invalidation. Well, an invalidation to the short would be a strong close above here. Now, keep in mind that we have the daily 50 EMA, and it's lowering every day. And we have a really bad death cross coming here with the 21 and 50. So watch out. That's going to push us. When that crosses, that's going to get us very close to my target. Very close. But I'm still looking for that lower high cross into our target. So that's the play for right now. There's going to be a lot more plays in between, but I'm going to give those to my private Discord, which is why they pay me. This is a free video for a quick update. It's not quick right now. It's 15 minutes, 16 minutes in, but I'm trying to do it as quickly as possible, only because I want to give you as detailed of information as possible. I just want to go in here, and here. I don't want to do a video like that. I want you to understand my style of trading and why I trade the way I do. And this is not as detailed as I do on my everyday. Every day I do a video, and I did a video already with a detailed play by play. I do those every morning. That's why you pay me, $125 a month. And I work 7 days a week. You tell me if that's not worth it. So if you guys interested, let me know. Let me know. You can just go to bleedingcrypto.com, bleedingcrypto.com, and sign up. You can try it for a month. If you don't like it, that's it. Cancel it. No big deal. No big deal. So I'm going to cut the video now. It's 17 minutes in, but at least you know what we're looking for. We're looking for that lower high, holding on to my short in case we do go to my target right away. Weekends coming up, low volume weekends, they tend to close objectives. So what I mean by that is on low volume weekends, they will take the advantage to close this objective. This is an objective to here. Why would they do that on a weekend? Because there's not that many people that are going to jump on, as many people as during the week, to jump onto a long. When they bring it up here, it's to liquidate the shorts. They don't want to have to now liquidate. Now they don't want to have pay any long positions because it eats away at their profits. So they're going to use low volume periods where it usually is the weekend to do moves like that. And then Monday morning comes with New York, and you know what New York does? 95% of the time, New York dumps. So this is setting up for one of those weekends. Could I be wrong? Absolutely, which is why I'm holding my short to my target and I have a stop loss at break even. So I'm covered either way. And then once my signal for the long comes up, I take it, and I do with the high probability that we're going here. All right, guys, have a great weekend, and I'll be back with you guys Monday morning for the next market update, and we'll see what happens over the weekend. We will see if on the weekend we were able to go to our lower high rule, and then we'll see by Monday morning if we're here, good chance that we're going to put a lower low. And we'll take it one day at a time. I'm going to do these videos for you guys Monday through Friday. I started on Wednesday. This is the third one, and I will try to narrow them down to small. We may have to change the title to a 20-minute market update. All right, guys. Talk to you later. Have a great weekend.